7 secrets the IRS doesn't want you to know. You see, these will change the way you think about taxes completely. And for those of you who stick with me to the end, I'll give you a bonus secret that can help you actually save more money and grow your wealth pretty fast. And you probably won't hear it anywhere else. So let's get right into it. Secret number 1 is that audits target the poor and the rich, but not the middle class. You see, the IRS doesn't spread audits evenly. The IRS has limited resources. They can't check everyone, so they focus on the groups where they expect the most bang for their buck. If you're considered lower class and you claim certain credits like the earned income tax credit, you're more likely to get audited. Why? Well, because the IRS has seen more fraud in that group, and the IRS uses computer systems that flag these returns. It's faster and it's easier to challenge a $2,000 credit than a billionaire's offshore accounts. At the other end, the rich get attention too. If you make $1 million a year, your audit odds are about 1 in 100. Over 10 million, they're closer to 1 in 10. But the middle class, well, that's the safe zone. So the IRS ends up in this weird position, right? Where they aggressively chase the poor because it's cheap and they probe the ultra rich because it looks fair. But the broad middle, they're left alone. And not because they're saints, but because there's simply not enough resources to go after everyone. Which takes us into secret number 2, which is that the IRS math errors aren't always correct. You see, when most people get a notice from the IRS saying they made a mistake, they assume the IRS must be correct. After all, right, it's the government. They have all the data. They must know what they're doing. But we know that that's not always true. You see, the IRS sends millions of math error notices every single year, over 9 million in some recent years. And here's what most people don't know. A significant portion of these notices are wrong. Okay, you're going to love this. In one study, 43% of people who disputed their denied tax credits were owed the entire amount the IRS had taken away. Think about that. Nearly half were right and the IRS was wrong. But most people never dispute it. They see the official letterhead and just pay up or accept the reduced refund. The IRS themselves even admit that their notices are often vague and confusing. So here's the truth. If you get a math error notice and you believe you're right, you have 60 days to dispute it. And the IRS will reverse the adjustment while they review your case. No proof required up front, just a simple request. But for some reason, the IRS doesn't exactly advertise this process. They send the notice, they expect compliance, and most people comply. The truth is that the IRS makes mistakes too, and you have the power to push back. Okay, secret number 3 is that you can amend returns to save money. You see, most people file their taxes and never look back. The return goes in, the refund comes out, or the payment goes through. Done, forgotten, move on with your life. But here's what they don't tell you. It's not actually over. You can go back and fix your old returns, usually up to 3 years, sometimes even longer in special cases. And when you do that, guess what? You can claim money the IRS has been holding this whole time. Think about it. How many people forget a deduction, miss a credit, report something the wrong way because they didn't know better? It happens constantly. Each mistake is real money, hundreds of dollars, sometimes thousands of dollars. And it's just sitting there, right? Unclaimed. In fact, a few years ago, I went back and amended my old returns to claim bonus depreciation on a few rentals. But the result was an $80,000 refund check. So imagine you forgot to deduct $2,000 in student loan interest last year. That's not a small mistake. That's a meaningful tax savings that you left behind. For 3 full years, you can file an amended return, correct it, and get a refund. But most people never do it. They assume once it's filed, it's locked forever. And that assumption costs them. And the part that really stings is that the IRS almost never will tell you, hey, you missed something. We owe you money. You see, their system is built to catch errors that increase what you owe, not errors that increase what they owe you. So if you don't go back and ask, the money most of the time will stay with the IRS. And the process to amend a return is super simple. Just file Form 1040X, show what changed, and claim what you missed. Now, on to secret number 4, which is that 173 individual and 125 corporate tax breaks exist, but there are only 4 buckets. You see, the tax code feels endless, hundreds of deductions, loopholes, credits, too much to track. But here's what almost no one tells you. Almost every break falls into just 4 groups: reduce income, defer taxes, shift taxes, and eliminate taxes. That's it. You see, your 401k, that's a deferral. Charitable donations, reduce income. Paying income to your child in a lower tax bracket, that's shifting taxes. And if you go to keepmost.com, you'll be able to see every worthwhile tax break to help you reduce, defer, shift, and eliminate your taxes. It's a brand new community started for people who want to save on taxes and grow their wealth. And it's really the only place where you will be able to ask me questions directly related to your situation, and I'll answer it live for you every single week. Now, on to secret number 5. You see, secret number 5 is that the tax code is mostly incentives, not punishment. You see, the tax code is long, right? Over 6,000 pages. And people look at that number and get scared. They picture pages of rules, punishments, what you don't do. But the surprising reality is that most of those pages are actually rewards and incentives. You see, the government uses the tax code to guide behavior. Want people to buy houses? Offer a mortgage deduction. Want people to save for retirement? Create 401ks and IRAs. Want people to invest in clean energy? Give tax credits. Yes, there are penalties, but the bulk of the code is carrots and not sticks. This is interesting, but you could think of it like raising a kid. You can punish bad behavior or you can reward good behavior. And the tax code does both, but it leans heavily on rewards. It's not only about what the government takes from you, it's about what they want you to do. And secret number 6 is that the tax prep industry profits off IRS inefficiency. You see, here's the darkest secret of them all. Your taxes could be one simple click. In many countries, filing taxes takes minutes. The government already knows your income. They send you a pre-filled form, you check it, and done. But in the United States, it's slow, it's messy, and it's stressful. Even though the IRS already has your W-2, your 1099s, your mortgage interest, and more. For most Americans, they know exactly what you owe before you do. So why isn't it easy? Well, because tax prep companies want it that way. Intuit, H&R Block. These companies make billions off the pain of filing taxes. So they lobby to make sure the IRS doesn't offer free simple filing, at least not easy enough to put them out of business. So the inefficiency there isn't an accident, it's actually a business model. Every hour you spend wrestling with forms is profit for someone else. Because complex systems often exist not because they must, but because someone benefits. All right, now, secret number 7 is that refunds aren't free money. They're overpayment. Every spring, millions of people get a tax refund and feel like they hit a jackpot. But the reality is that refunds aren't free money, it's your money. If you get a $3,000 refund, it means you gave the IRS $250 every month for a year. And they held your money, interest free, and then handed it back to you. Now, that's $250 a month you could have had in your pocket, paying down debt or earning interest. So the smart move here is actually to adjust your withholdings and keep that money in your pocket each and every month. You get more cash flow, you get more control. Now, of course, some people like refunds because it forces them to save. They know they'd spend it otherwise, and that's fine. But understand what's really happening. It's not a gift, it's a loan. Now, here's the bonus secret for everyone who stuck with me. And that's that sometimes paying the penalty actually saves you more money. You see, if you own a business or are self-employed, The IRS expects you to pay taxes every quarter, right? Quarterly estimated taxes. If you don't, you pay a penalty. Most people treat this like a disaster, but sometimes the penalty is small, about 0.5% per month or 6% a year. And if you keep that money instead, you can use it for something that saves you more. For example, you hold off paying $10,000 in quarterly taxes. Instead, you buy a rental property or invest in films. That expense becomes a deduction, which lowers your taxable income. Or you buy stocks instead and earn an average of 8% or more a year. In many cases, the interest can be bigger than the penalty. Say you contribute to a retirement plan at the end of the year. Again, the deduction can outweigh the fine. Now, this doesn't mean that you should ignore taxes because penalties can add up pretty quickly. But the point is this: sometimes, even with the IRS, strategy and planning beats compliance. So there you have it, 7 secrets plus 1 bonus for the people that stuck with me that can change how you see the IRS. Audits hit the poor and the rich, not the middle. Refunds are just overpayments. Even penalties can sometimes be used to your advantage. And, the IRS won't advertise these truths. Now, if this helped you think differently about taxes, go ahead, hit that like button for me and leave a comment. I can't tell you how much it helps the channel grow and helps this video reach more people just like you. But as always, my name is Karan, and I'll see you in the next video. Take care.